twice of those who say that they will see growth. Twice as many will say that they will see growth than say the opposite. So we're looking at this going, actually, small businesses are beginning to feel economic benefit. Consumer demand is OK, and the economy feels more stable. So because of all these things wrapped together, we're saying that actually we think, for the small business community, the shallow recession is finally in the past.
Yeah, I mean, small business is obviously the backbone of the economy. You think definitively this points to the recession being over?
It will. Obviously, we'll have confirmation, as you say, on Friday. But small businesses in manufacturing, it's actually across all sectors we saw a change. Now, in terms of numbers, manufacturing is at the top, but hospitality, which has been the most troubled sector, it's been really low confidence, has bounded back from minus 73 to almost positive. So we're hopeful that, Q1 will see a change, and then Q2 we'll see when the economy really starts to motor.
You mentioned the revenue expectations. I mean, what I find interesting about these numbers is that revenues for small businesses actually fell during the quarter that's just ended. So they're obviously looking in the road ahead rather than the rearview mirror.
Yeah, Q4 was really bad. I mean, this is supposed to be the golden quarter, so you would expect Q4 to rise. It didn't, it fell. So I think what we're seeing is a longer-term trend. So you're seeing every region now changing from a negative reading to positive, almost every region. You're seeing almost every sector rise from negative to positive. It's almost like a gentle rising tide floating all boats. So we are hoping that to see that really motor in Q2. You're right, looking back, it's been a really troublesome 2023, really difficult, and I think the shallow recession in the stats just reflected that.
Interesting to see, though, that inflation remains a headache for a lot of small businesses, even though it's been coming down pretty steadily.
Yeah, I think cost pressures are still there. If you look at small business, what they say is holding them back. The strength of the economy is still there, but it's beginning to fall backwards. Labour costs are really rising. Taxes and costs still rising, but rising at a lower rate. So I think people saying that their costs are significantly rising are beginning to fall. I think that's the kind of trend you're seeing in the economy, which hopefully will feed through into a happy day on Friday.
What are you hearing about hiring intentions? Because obviously, when businesses feel more confident, they tend to take on more people.
This is really important. So they're saying that the labour market is becoming a bit softer. So the availability of staff is becoming a bit better, but from a very low base. But in order to employ people, they're having to pay them more. So we're seeing real increases in labour costs. Now, for us, that means the government should be looking at things like the employment allowance, because that means if you expand that, then a small business will be able to employ that extra person. And really, this whole recession talk is about morale. Small businesses react very well to positive morale in the economy. So that recession word is toxic. So moving on means a small business will think about, do I expand to a second premise? Do I employ that 7th or 8th team member? So hopefully this positivity will lead to the next quarter to really strong growth.
Very interestingly, there's a piece in the report also about access to finance, which is obviously a huge bugbear for small businesses. It even looks like there's some positivity there.
Yes, the number of people who say they get less than 4% interest rate has gone up, and those who say they get more than 11% interest rate has gone down. So it's the right direction. There are some market issues, though, things like the blanket use of personal guarantees. We've picked up a really big section of the small business community is hurt by this. People who set up limited companies in particular. So we are pushing for the FCA and the government to take another look, because there is more that can be done on access to finance, but the movement is beginning to be in the right direction on that.
And in terms of hospitality there, which you mentioned, I mean, it is still in negative territory. Are you expecting some sort of improvement into positive territory there before too long as well?
I hope so, because you've got the VAT threshold change, which is very positive. You've got changes to business rates focused on retail, hospitality and leisure. So from this month, business rates bills will be kept at a 75% discount. So, these kind of big policy decisions, which are good for this government has done, will now begin to flow through. So hopefully small businesses in these sectors will start to feel the difference in their turnover and in their costs.
And all this, of course, before we even get an interest rate cut, which we do expect at some point.
I mean, that would be the icing on the cake, because if that happens in June, which is what we're expecting, hopefully, that would mean, the cost of capital really starts to get better for small businesses. So that would really help, because the last recession was really hit by small businesses suddenly being hit by mortgage and loan increases, and they were hit both at home with their mortgage, but then also with commercial property in the same way.
All right, Craig, got to leave it there. Good to see you this morning, and thanks for sharing this information with us first here on Sky News. Appreciate it. Bit of breaking news to bring you. The banking group TSB has just said it is closing 36 branches and cutting 250 jobs across the business. Obviously, that news in keeping with what we've been hearing across the market from a number of lenders of late. More on that as we get it. Now, despite facing significant sanctions on its exports, Russia is making more from its oil and gas sector than in the months after it attacked Ukraine. And it's thought some Russian oil is still seeping into the UK because Britain is importing a record amount of oil from Indian refineries, which are in turn importing record amounts from Russia. Our economics editor, Ed Conway, is with me. Ed, do we know precisely how much Russian oil is making its way to the UK?
Well, I mean, so if you're talking about crude oil, we have a ban on importing crude oil from Russia. So the answer to that is zero. I mean, since those sanctions have been imposed, no tanker coming from Russia has been able to dock in the UK. But this really is the key thing, OK? So with those sanctions, so it's not the UK is not the only place, the EU as well, the US have all said they're not going to accept Russian crude. What they haven't said, if you read the small print, is that we're not going to accept any products made from Russian crude, OK? And that's basically what's happening. A lot of Russian oil is going to places like China, it's going to places like India, it's going through their refineries, and then it's being turned into diesel, into gasoline, into kerosene, and then it gets shipped over to lots of other countries that say they're not going to take Russian oil, so including the UK. If you look at the amount of oil that we are getting in this country, oil products, so stuff like kerosene, so jet fuel, stuff like diesel, if you look at the amount that we're getting from India, it's gone up incredibly quickly, more than 100% since the imposition of those sanctions. So in practice, Ian, what's happened is Russia is still able to sell lots of oil out there on the global market, but instead of coming directly to us, it's going via other places, and some would say it's kind of being laundered along the way.
Obviously, oil prices have been falling this year. So on that basis, is it fair to say that this is down to an increase in Russian export volumes?
Well, I mean, to be honest with you, oil prices have been falling this year. As you know, there are lots of economic factors behind that. A lot of people worried about the Chinese economy. Russia, if you look at the actual volumes coming from Russia, so not just looking at the price, because the price number is down. Russia is making a bit less than it was previously from those exports of oil. But if you look at the volumes, they are basically as high as they have ever been. Okay, so a lot of people will look at this and they say, well, rather than stopping Russia from actually making money off oil, instead you're just kind of reconfiguring the global market. You're shifting all of those oil exports. So instead of just those ships going straight to the UK or into the EU, they're just going round further towards India. And the end net product is still that Russia's making lots of money. You could make the argument it's making less money, slightly less money than it would be otherwise, because there is this price cap. Quite a complicated thing, but a price cap basically saying if you're going to be buying Russian oil from Russia, you should only pay $60 a barrel or less. So that price cap is imposed. The tricky thing there is Russia has found various ways to try and circumvent that, basically introducing its own ships, a dark fleet as it's known, which means that they don't necessarily have to obey that rule. And things do get murky. And it's this story that we've been trying to tell in all of its different dimensions. It's not just about oil. It's about goods going into Russia, goods coming out of Russia. It's about cars as well coming from the UK. Lots of UK cars going to places which are Russian client states. But it is our job to try and give a sense of whether these sanctions are working. It's the biggest experiment we've ever seen in sanctions. And right now, certainly, they are slightly more leaky and slightly less effective than a lot of people might have promised in the first place.
OK, thanks, Ed. Some other business news stories for you now. And the government has awarded a £196 million grant to build the first next-generation nuclear fuel facility in Europe. The grant to the Anglo-Dutch nuclear fuel consortium Urenco would see a uranium enrichment plant built in Capenhurst, Cheshire, with the support of 400 jobs. Well, the government said the facility, due to begin producing fuel in 2031, would put an end to Russia's current position as Europe's only commercial producer of so-called high-assay, low-enriched uranium. The fast fashion retailer Boohoo said this morning it was positioned to return to growth after reporting a drop in sales and a widening of full-year losses. Boohoo, whose brands include Karen Millen, Coast, Nasty Gal and Pretty Little Thing, saw pre-tax losses widen to £159.9 million in the year to the end of February. That was up from £90.7 million during the previous 12 months. But the company, which also owns the Debenhams brand and website, said that following a year of high inflation and weakened consumer demand, it was starting to see an improvement in performance in its core brands. Pub operator JD Wetherspoon today hailed a revival in sales of traditional ales, as it said profits in the current financial year would be towards the top of market expectations. Tim Martin, the founder and chairman, said sales of traditional ales, which had been very slow in the aftermath of the lockdowns, were increasing momentum, with brands such as Abbot Ale, Ruddles Bitter and Doombar showing good growth, as were ales from the many small and micro brewers with which the company trades. Sales during the 13 weeks to the 28th of April were up 5.2% on the same period a year earlier. On a like-for-like basis, that, of course, is the measure that strips out pub openings and closures and refurbishments. The London Eye, one of the capital's most visited tourist attractions, has been given permission to remain on London's South Bank permanently. When the Eye was built in 2003, planning permission required the local planning authority to decide whether the attraction, which is owned and operated by Merlin Entertainments, could be retained beyond 2028. Lambeth councillors last night voted in favour to maintain the current arrangements beyond that date, which includes a requirement for 1% of the attraction's annual turnover to be paid towards maintenance and management of the public area surrounding the site. Well, the big story on the currency markets this morning is that the Riksbank in Sweden has become the world's first major central bank to cut interest rates this year. The Riksbank cut its main policy rate from 4% to 3.75% and indicated there would be 2 more cuts this year. It's the first central bank using one of the world's 10 most widely traded currencies to do so. This year, the Swedish krona, I can tell you, has fallen by nearly 2/3 of 1% against the US dollar and by around 1/3 of 1% against the euro. Meanwhile, the pound is off against both the dollar and the euro this morning. On the equity markets, where stocks in the Asia-Pacific region had a bit of a lacklustre session overnight. Only the Sydney market finishing high among the ones on the screen. The Nikkei in particular succumbed to profit-taking after Tuesday's strong gains, off by nearly 1.75%. In Europe, though, well, stocks have been trading largely to the upside this morning, following some solid trading updates. Talking points this morning include Siemens Energy, the German power equipment supplier, up nearly 13% in Frankfurt, as its quarterly results absolutely smashed expectations, it must be said. Meanwhile, the Dutch supermarket giant Ahold is ahead by some 3.5% in Amsterdam for similar reasons. Well, here in London, the FTSE 100, having hit a fresh closing high yesterday, is at it again this morning. FTSE up 0.5% right now in a broad-based rally. Obviously, that represents a new intraday high. International Airlines, the owner of British Airways and Aer Lingus, is the leading blue-chip gainer just now. That's up 3.5%. All of the airline stocks fell yesterday, so a bit of a rally in those particular stocks right now. Also higher today in the FTSE is Informa. You'll recall we had the chief executive on the programme fairly recently. The world's largest exhibitions group has raised its share buyback programme following an upbeat trading statement, up nearly 2.75% just now. There are not too many fallers to mention on the London market this morning, but BP continues to drift after yesterday's rather disappointing results, off 1.5% just now. Outside the FTSE 100, OSB, which is the old One Savings Bank, is up 2.5% on a trading update. Well, Wizz Air, I mentioned all the airline stocks were under a cloud yesterday. Well, look at that. Wizz Air has brought out the bargain hunters this morning, currently 3.5% to the good. As for the oil price, well, we were talking to Ed about that a little earlier. That's fallen to its lowest level since the 12th of March today. And that is after overnight the US Energy Information Association cut its forecast for global demand this year. A barrel of Brent crude will currently set you back $82.34 a barrel. That's off a little under 1% on the session. Well, joining me this morning is Roberta Barr, fund manager at Schroders. Roberta, lovely to see you again this morning. Market in London now really setting new records on an almost daily basis.
Yeah.
Now, we know it's been trading at a discount to some of its peers,
Yeah.
but how long before it gets up with events?
Well, I mean, it's an interesting question. I think a lot of people, when they see all-time highs, they think, oh gosh, well, I've missed it, now's not the time to invest. But actually, Duncan Lamont at Schroders has come out with some really interesting research showing that actually 30% of the time, markets are at all-time highs. And actually, if you don't invest when they're at their all-time highs, that is value destructive over the long term. So I think he showed that, you know, with increasing amounts over the 5, 10, 25-year period, actually is a bad idea to not invest at all-time highs. And I think you made a good point there as well about the relative valuation matters as well. The UK is still a very attractive opportunity. I'm a value investor, and we're certainly very overweight the UK in our deep value funds.
And obviously, I imagine a lot of that has to do with US buyers coming in particular. You know, sterling is pretty weak, the dollar's pretty strong. We've seen a lot of takeover activity among lowly rated UK corporates.
Yeah, exactly. And as with all of these markets as well, you've got the big top names, like in the US, the Magnificent Seven, kind of dominating the story. But underneath it, there's a lot of interesting things going on, as you mentioned, and a lot of really exciting opportunities out there for value investors like myself to buy some really quite high-quality businesses at, very, very attractive multiples.
What's taken it this long? Because, I mean, it's been striking to me, the number of UK companies buying back their shares right now. I mean, it seems every other company in the FTSE's doing it. I mean, that's normally a pretty good cue to the market. Look, these businesses think their stock price is underrated.
Yeah, well, we would certainly think so. I think also the buybacks, we definitely prefer to the acquisitions. I think, our opinion is that's definitely a more attractive form to redistribute capital, if you will, to shareholders. Whether it's going to be the sort of signal to the market, the catalyst, I could never comment on that. I am definitely not a catalyst person. But what I would say is, if you look at what happened in Japan, for years, everyone said that's going nowhere, what a ridiculous place to invest, why are you so overweight, Japan? Well, we've really benefited in our global funds having that overweight. I don't think many people could have predicted that sort of turn in capital allocation policy, the new sort of rules from the Tokyo Stock Exchange, and that ultimate uplift that we've seen.
Now, if you take the traditional investment yardstick, the price-earnings ratio, I mean, the UK is still on a pretty hefty discount, not only to its US peers, but also to some of those in continental Europe. How much upside would be implied if the UK were to sort of get a rating similar to those on continental Europe?
I, again, wouldn't want to comment on exact upsides, but what we certainly do at Schroders is we tend to look at more normalised numbers. So rather than just spot price-to-earnings metrics, we'll look at CAPE, so cyclically adjusted price-to-earnings, or sort of EV to NOPAT figures, so taking into account the debt and equity ratios within the company. And certainly, across all of those different metrics, the UK is at a significant discount to, yes, European, but global, so US peers. And without giving you an exact what I think the upside is within those companies, certainly when I look across our deep value portfolio today, some of the positions which I am most excited about, where I see the most amount of potential reward, but not necessarily the most amount of risk, is definitely in some of those UK names.
All right, Roberta, we're going to leave it there. Good to see you this morning. Thank you. Still to come here on Business Live. What's fueling Vietnam's economic boom? Stay tuned to find out.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. Alex Crawford joining us now from Ukraine.
Their personal possessions are all scattered around the place.
Our economics and data editor, Ed Conway, try and make sense of the big numbers for us.
Things can change incredibly quickly, and that's what they have done.
So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
I'm Greg Milam, and I'm Sky's chief North of England correspondent. I've reported from around the world and around the UK.
I'm Mark Stone, I'm Sky's US correspondent based here in Washington, D.C. And beyond the United States, from across the world, I report on the biggest stories.
I'm Stuart Ramsey and I'm Sky's chief correspondent.
I'm David Blevins and I'm Sky's senior Ireland correspondent. I remember some of the worst of the violence here.
I'm Alex Crawford and I'm Sky's special correspondent based in Istanbul.
Welcome back. Few countries are better placed than Vietnam to get rich. Well, that was the headline in The Economist earlier this year, and it highlighted Vietnam's growing geopolitical influence. It was the only country last year to receive both Joe Biden and Xi Jinping on state visits and attracted nearly $37 billion worth of foreign direct investment last year, which was up 32% on 2022. So what investors need to know about the country? Well, joining me now is Con Vu. He's co-manager of the Vina Capital Vietnam Opportunity Fund. Good to see you this morning. I mean, clearly Vietnam has benefited from countries moving their supply chains away from China. How long has that got to play out, that particular phenomenon?
So it's important to note that that phenomenon has been happening well before this US-China tensions. Companies are finding that they can access Vietnam for its young, productive labour force. Labour costs are about a quarter that of China. So certainly we've seen a significant amount of investment into the country, the FDI figures that you mentioned. Importantly, this year alone, the first quarter of this year, we've seen actually a significant increase in commitments and disbursements. So to answer that question, that shows you the pipeline of opportunities and investments to go. And I think this is the country is in a space where we will see significant levels of foreign investments going forward.
Obviously, Vietnam is a very export-led economy. What happens if global demand starts to ease because, for example, the Federal Reserve doesn't normalise interest rate policy anytime soon?
Yeah, so that's always a risk and a consideration. You are right. We are one of the most interconnected countries in the world in terms of trade. We have something like 17 free trade agreements with partners around the world. But importantly, we are a country of 100 million population. One of those few countries in the region where you had that demographic dividend. And so the domestic consumption story is very important. We've seen retail growth increase last year about 7%, and we're looking for a similar level of growth this year. GDP growth last year was about 5%. We're expecting 6 to 6.5% this year. And again, one of the higher levels of GDP growth in the region.
Obviously, the dong has fallen by around 5% so far this year against the dollar. Are you at all worried about inflation taking off as a result of that?
So with regard to the dong, it has devalued, similarly to other countries in the region, perhaps a little less, in fact, than other countries in the region, off that strong US dollar and perhaps a reluctance for the Fed to reduce rates as aggressively as intended. With regards to inflation, though, Vietnam, during COVID, we didn't have to stimulate the economy through fiscal spending. Recall that as the rest of the world closed, we were still very much the factory of the world. So inflation in Vietnam has been running, on average, about 3 to 4%, and that's the level that we expect to be running this year.
Yeah, not particularly hot when you consider GDP.
Right, and in fact, if you think about levels of interest rates, prior to the recent cuts, you're getting real returns. Investors are getting real returns investing into the country.
Now, one thing that's commonly levelled at Vietnam is that labour productivity is still pretty poor. There's a bit of a skill shortage. Is that being addressed?
Certainly has. If you think about where we've come from, 20 years ago, we were very much an agricultural-based economy. Still today, we're one of the largest exporters of rice, of coffee, of pepper. But over time, we've evolved and we've become a significant exporter of shoes. So most of your shoes from Adidas you wear today, if you look at the labels, from Vietnam. Importantly, though, about a third of exports today come from technology, high-tech and manufacturing. Half of Samsung's phones in the world are made in Vietnam now. Apple has a significant number of products that are made in Vietnam. Tim Cook was there recently. What wasn't widely reported is that Vietnam has about 19 suppliers to Apple products, one of the most in the region, in fact. And so what we expect is that over the long term, that the export-led economies is going to be significantly still remain very important.
And what about continuity of power supplies? Again, it's something that a lot of external investors complain about, power outages.
Yeah, certainly the improvements and upgrades to both the capacity as well as the transmission, the grid, is going to be a very important aspect. And the government obviously has prioritised that in terms of bringing in foreign partners as well as within upgrading the system internally.
Although there is greater continuity of power to rural areas. That's one thing that has been achieved.
Yeah, and I think that's a very important aspect. There is a certain level of urbanisation. Vietnam is running at about 1.3% level of urbanisation. Just to put that in real terms, that's like 1.5 million people moving from the country into the city. So there is a significant level of investment that is needed.
And I think they're going to be the 20th biggest economy in the world by the end of the year?
We hope so, certainly. And we'd like to see that move further up. If you think about GDP growth over the last 20, 30 years, it's one of those few economies that's been able to constantly sustain 6-7% GDP growth.
OK, we've got to leave it there. Great to see you this morning. Thank you. That's it from me for the time being. I'll be back, of course, with our afternoon edition at 4:30. Hope very much to see you then. In the meantime, do stay tuned. Coming up next, it's Jane Secker and our Deputy Political Editor, Sam Coates, with Prime Minister's questions. There's the scene in the Commons right now. I'll see you later on. Thanks for joining me today. Cheerio.